Good afternoon, traders. Happy Monday. I hope that you're all doing well today. It is a tough day out there in the markets for the bulls. Price has not managed to find any support really anywhere. We're just slowly grinding lower. And it's a drag. I have to say it's a drag. Things are a lot more fun when price is going higher. It's just the way it is. I hope that everybody had a great weekend. We have been watching this morning just the indices, kind of keeping an eye on things on the indices. They're coming into, what I would consider to be important levels. They're kind of failing below where I had initially thought maybe we might be catching a bid. SPY's getting into an important spot here, coming back into that big level, that 410 to 415 area. This has been a major level for the past couple of months. Back in June, it was a nice distribution area. And then in August, the beginning of this month, we had a nice accumulation area. We managed to break right through it. I mean, for now, what it appears to me, this is just technical coming back, making sure that previous areas that were resistance are going to act as support. On SPY, we do have a level below that we're coming into right now. Let me add the gap indicator. And we've got a level. We are filling this gap right now. We're coming right into it. So it'll be interesting to see what happens once we do that. I mean, we're pretty much there right now. I think this is a pretty important level to hold. I definitely don't want to see them go too much lower than this 412, 413 level. To stay in this uptrend, I really want to see this higher low being put in. Hey, Lori, how's it going? Hope you're doing good. Everybody who's here right now, please say hello. I'd love to get to know you all. If anybody has any questions about anything TrendSpider related, happy to answer those questions for you. If you have any charts you want me to take a look at, happy to look at those charts for you. Until those Qs come in, we're going to take a look at the Qs. And so the Qs, looking a little bit rough, especially in comparison to the SPY. Quite filled that gap real nice that we are looking at there on the SPY at around 319 here for the Qs, or 319. And now we're actually making a new low relative to that previous low. So the Stratters, I believe, would say that we are potentially coming into an exhaustion risk area since we're coming into a swing low and we're breaking down below it. So it'd be interesting to see how long this persists. And it kind of helps us make some decisions about where we want to be thinking about trades for the future. If we hop over to IWM real quick, we can take a look at IWM. And IWM, in a similar spot as the SPY, has not managed to take out that low that we were just looking at on the Qs there, the low on IWM, about 189.19 or so, but it has filled that little gap now, and it's left a new gap above that maybe one of these days it will come back and clear out. So things not looking so great if you're bullish. Even some of like the big bull names. We talk about Enphase. We've been keeping our eye on Enphase for some time now. Enphase making another move lower and breaking below the previous all-time high right here at 280.247. This was a level that we were looking for to stay as support, and it was support on August 9th. There was support on August 19th. And now it's looking like we might be getting a flip here. Also losing the anchored VWAP from the big gap up on that earnings day. So not as encouraging as I would like on this particular name. Another one that's been a big mover, Oxy. Oxy printing a nice inside day today. Yeah, Chewy. So, this is the big thing, right? Chewy, is the dollar. If we go over to UUP, some weeks back, we spent some time hanging out with JC Peretz from All Star Charts. He did a live charting show with us about a month ago or so, and he was talking about the dollar. He was explaining the correlation between dollar and stocks. And this hasn't always been the correlation between dollar and stocks, but it has been for some time now. When the dollar goes up, stocks go down. When the dollar goes down, stocks go up. Well, we've got the UUP here. This is the ETF that tracks the dollar. And what are we doing? Well, we are coming into previous highs, the July 14th highs. So since July 14th, we could see a very, very clear sell-off, right? And we've only seen this strength back in the dollar over the past maybe 1, 2, 3, 4, 5, 6, 7 sessions. If we go back to SPY real quick and we go to July 14th, what happened on July 14th? Well, on July 14th, the SPY and all the indices really made a higher low and have absolutely ripped since. So this is that inverse correlation that JC taught us about. If the dollar is gaining, stocks are not. And if the dollar is not gaining, then stocks should. So what do we want to see? If we want stocks to go up, we need to see this dollar to stop right here. Hate to say it, I love it when my dollar is worth more, but the reality is I'd like my stocks to go up too. So we're keeping a close eye here on the UUP and the dollar index, the DXY. And we're trying to decide what we think it's going to do. Now, right now, it's certainly looking like it's going to keep gaining. Nice technical pullback. Continues to make higher lows. There's no reason why we shouldn't expect this thing to continue higher. We will have to wait and see how it plays out. What are you guys watching today? I was kind of like digging around looking for stuff that had strength. Apron was at the top of my watch list today. Big move off of yesterday, or off of that pullback low today. 24%. Absolutely massive move. Sell H is up also today. Still continuing to flag out, but closing above a level of importance for me. They tried to come back into this gap and they managed to hold it. So some real relative strength there on that earnings report. Something to keep an eye on. What else? You know, one thing that I like to do whenever I'm looking for stocks to trade, I like to scan. And so, you know, on a day like today when markets are kind of weak, selling off, I like to look for what's strong. So let's do that. Let's do a little digging, see if we can find some stuff that's strong. There's a lot of different ways that you can think about strength. The way that I kind of think about it is just looking for stuff that's making new highs, right? And we can decide, or we can define new highs however we want. But let's just do like 52-week highs. Let's look for something that's making a new high relative to its 52-week high. So the way that we're going to do that, we're going to come in here, we're going to say condition, and we're going to say price. I'm going to say daily close is greater than, and now I'm going to use range because I'm talking about a range. I'm talking about a range high. So range is an indicator. So I'm going to say indicator. I'm going to use the weekly time frame for this. I'll explain that in a second. And then I'm going to search range. I'm going to use range high. So now I've got today's close, or today's current price, is greater than a weekly range high. This is predefined as a 20-week range. I'm going to change this to 52. That's a full year. And then I'm also going to offset it. So I'm going to push this back one candle. And the reason why is I don't want to include today's price in the range. So today's price is greater than the 52-week range high one candle ago. So that essentially is talking about last week's weekly high and looking back 52 weeks. So anything that has a higher price today than its high price the last 52 weeks, this is what's going to come up. We're going to turn the current candle on. I'm going to search NYSE. I'm also going to add another parameter in here real quick. You guys know I like to define my minimums. So I'm going to say indicator. I'm going to add a volume criteria, say volume MA. The reason why I use volume MA is because this is the average volume, not today's individual. It's not a single volume, it's the average. So it's a 20-day average. And I'm going to say greater than a constant value. I'm going to say 1 million. So that means that on minimum over the past 20 days, it's traded at least 1 million shares per day. And then I'm also going to say price. I'm going to define a minimum share price. So daily price close is greater than a constant value of 10. So that's just, if you happen to maybe not like to trade penny stocks or stocks that trade at a low price. Kind of, we are just trying to weed out some stuff here, see what we can find. So to recap, we're looking for names making 52-week highs that trade at least 1 million shares per day and are at least $10. Is there anything meeting that criteria in the NYSE today? SGFY is one of those names. Big gap up today. Don't know what the news was there. We could throw some news on here, though. Let's see. I'm going to keep that on. I'm going to turn this off, and I'm going to turn on the news. See if we can figure out why this thing's moving. Oh, Amazon. Bid to buy. Got it. That'll do it. All right. Interesting. This is the only name in the NYSE that meets this criteria. Let's check NASDAQ real quick. So I'm just scanning through the different composite indexes to see if we can't find anything. Chitty, what's going on, Chitty? Can you please tell us where will next ES lower point? I'm not sure I understand what you mean. Can you clarify what you mean there? You're just looking. Are you asking where I think ES might catch a bid? AXSM, big day today, filled that gap above, blew right through it, in fact. Interesting. Wonder what the news is here. This is a really great way to find big movers. Just anything that's making new 52-week highs. If anybody's interested in this scan, let's do this. I'm going to share it with y'all. I'm going to say save. Click these 3 dots. This is one cool thing about the TrendSpider platform is once I create something like this, I can share it with all y'all. You could do the same thing as well. If you create a scan or you create a set of conditions, whether it's in the alerts or in the back tester or anything like that, you can save those conditions as a scan and then share that scan. So I'm just going to share that with you guys real quick so that you can have it. You can play around with it yourself on your end. Sonia, what's up? NASDAQ, Dow, both are now in downtrend, means sell on the rise. Generally, trend remains the same for minimum of 1 month. SPY targets 407. We'll take a look at that here in a second, Sonia. There we go. So if anybody's interested in loading that scanner on their end and using it themselves, here is a link to do that. Just click on that link. Lori, yeah, absolutely we do. 7 days free trial, and you can usually get that extended as well. We're pretty lenient about extending the trials, at least an additional week. So since you're asking, let me get you this. Here is a link to a 25% discount, Miss Lori. If you'd like to take advantage of that, you are more than welcome to. Once you open that link, you'll have 7 days to redeem it, just so you know. Yeah, absolutely, Lori. Absolutely. Happy to assist. You let me know if you have any questions about anything while you're in your trial as well. Just so you know, down in the bottom right-hand corner here where it says contact us, this is a direct feed into our employee chat room. We have live employees in chat Monday through Friday, about 20 hours per day, and then on the weekends, about 8 hours per day. So almost always someone around who can help answer a question for you. Any questions that you have about the platform, send those along here. Of course, I'm happy to help answer those questions too. You know, if you have questions while I'm live, feel free to ask them. If you want to hit me up on Twitter, you can do that. My Twitter handle is right in the bottom of the screen, Krutzky Trades. So if you're ever curious about anything, you can always hit me up on Twitter too. Happy to help you there. And then finally, if you click your name, top right corner, and you scroll down to where it says scheduled training, you'll see it in between these two buttons. And the only reason you don't see it on mine is because I'm an employee. I'm essentially a trainer. But you can click on where it says schedule training, and then you can get free one-on-one training sessions with our educators. So those are open to all of our users. You can access them at any time, and they are free. So if you need like a kind of like a more extensive, more precise walkthrough of a particular tool or feature, you can always sign up for one of those. Oh, waste management, WM, 52-week high. Huh. Not today, sir. Not today. But it's close. It's certainly close. Looks like it had a 52-week high on, what's this, on Thursday? You know, I mean, the thing about trash is always going to be trash, right? Always going to be trash. Haven't looked at this chart in a while, but looks fantastic, doesn't it? New highs, higher lows. She's a beaut. She's a beaut. She may be a little extended, but may not be. You can keep going. RSI isn't too bad on it. Ooh, some interesting options activity here. 10,000% of the open interest. What day is today? Today's the 22nd. Okay, so today, on the 190 put for January 2023 expiry, 10,000% of the open interest came in today. That's kind of interesting. Into new highs, essentially, and they're selling puts, or a big put order comes in for the 190. $180,000 of premium on that particular trade. That is a very strange trade. And specifically, I think it's strange because of the open interest. I mean, 10,000%, that is a lot. It's just a strange order. So then, you know, you kind of wonder, like, coming into new highs, the thing's in a great trend. Why is somebody positioning themselves that way? One of the cool features of TrendSpider is the unusual options tab. This is the widget here. Lets us know just where the unusual options orders are. Unusual options being any order over, I believe, $15,000. These are going to be both sweeps and block trades, or maybe it's $20,000. I'm blanking on whether it's 15 or 20. I think maybe it's 20. But you're going to pay a monthly subscription fee, a full monthly subscription fee for this sort of data, or you can elsewhere. It comes free on TrendSpider. NLSP, 58 cents. Blockbuster narcolepsy data in September. Marmon, what is this? NLSP. It's a big day on NLSP, that's for sure. But I have to admit, this is a really ugly chart. Yeah, you know, so sure, maybe this one's going to turn out to be a winner. I'm not going to tell you that it ain't, but I also wouldn't be trading it personally. This is just outside of the realm of stuff that I'm interested in. Penny pharmaceutical names is not my bread and butter. Completely based on things like what has happened today. Narcolepsy data. Oh, so they haven't had the narcolepsy data. It's coming in September. So they announced that it was coming in September. Is that what you're saying? Yeah, I mean, if you were in at 50 cents, great. But I don't know. That's outside of my scope, my friend. What's up, Ben Krupa? How you doing, Ben? Hope you're doing good today. Hope all is well. Hope you had a nice weekend. I'm coming back into SPY here. Just kind of see, I mean, they are just selling. That's all they're doing. They're selling. Just not giving us any opportunities to take long opportunities here. I was thinking for a second that maybe since we are coming into kind of this, you know, coming into this gap fill here, looks like the bottom of the gap on SPY is around 411 and change, 411.5. I thought maybe they might try and front run it. Just kind of trick people. Front run it. There is some divergence forming here on the 15-minute. You know, we've got lower lows, we've got higher lows on RSI, but we're only an hour and 10 minutes out of market open, or rather market close. So they don't have a ton of time to like get this thing up and moving. And for me, if I were to want to take a trade on this, there's so much more that needs to happen for me to want to take a trade. So I'm kind of thinking that I won't get to do anything on SPY today, unfortunately. Shiv, what's happening, Shiv? Is it Shiv Kumar? Hope you're doing well today, sir. What are we trading? What are we looking at? What questions do we have? It's kind of a boring day out there. Yeah, I don't know if you guys saw the little the little clip on the YouTube of me on Hodor's back. But I'm standing on the back of a giant looking for opportunities. And I just don't know where the opportunities are today. So we've done a little bit of scanning here. We could do a little bit more scanning and see if we can find some stuff. Let's try some things. I'm just gonna do like some moving average stuff. I'm gonna look for like EMA crosses. See if we can't find anything. Let me use the 8 and 21. Do the old Scotty method. Thinking AMD breaks 4-hour support. Be looking at $90. What's up, Oscar? Vargad. Is that how we say your name? Vargad? That's a nice name. Why the downfall? Well, I mean, things have been extended, man. Things have been starting to get a little extended. So this, for now, these are just retracements. This is nothing to be like wildly scared about. Now we'll see, you know, time will tell. Time will tell if this is something to be more worried about. But right now, I mean, with SPY, you had SPY into the 200-day. Let's see here. DJX. Yeah, so for now, I mean, things are just filling gaps below. You know, things got extended. They broke out of bases, and now they're just coming back to test. That's my interpretation of it. I don't think this is anything more than that, at least for now. Lori, you're buying puts on Meta. Let's look at Meta. I believe 154 was about the level that it needed to hold. We've been kind of watching this. Let me remove all of these. We have been kind of watching this level. And, you know, I mean, the thing about these tests, you know, your first test, even maybe your first couple of tests, your first 2 or 3, like, that's where things are, you're feeling a little bit safer. It's coming back into a big spot where you would expect some sort of bounce. And we ultimately get the big bounce. We come back and retest it. But now we've kind of failed, haven't we? We're not able, went all the way back to those lows, and they held. But when we bounce, we were never able to make a new high. So that to me is really concerning. If they start losing kind of up in here, like 160, I think this thing's going to leg down again. Because there, you can only test the level so many times. That 154 to 157 area, kind of just all in here, they've tested it so many times. If they come back into it again, I might be looking for a short opportunity for the next leg. So What indicator is best for 5-minute trading? Oh my gosh. Well, I mean, it really just depends on what you like to use. You can, in theory, you can use really any indicator, and they're all going to work from time to time, right? I think if you're trading the 5-minute time frame, you just have to be mindful of the fact that you're trading the 5-minute time frame and that things can change really quickly. So I don't know that there is a quote unquote best indicator for that time frame or really any time frame. I think it's more so a matter of you becoming really, really familiar with how a particular name reacts to a particular indicator on that time frame. Me personally, I like to use RSI. I'm more of a price action trader, so I don't use a ton of indicators personally. But there's all different ways you can do things, right? Like there are many ways to skin a cat, as they say. It's kind of a weird metaphor, but find some things that you like to use and just be consistent with using them. You can use moving averages. You can use MACD. You can use Bollinger Bands. You can use all kinds of different things to trade the 5-minute time frame, but ultimately it's about being consistent in your process. If you're using moving averages, maybe you want to use kind of a shorter one and a longer one and then see how they are relative to each other. Like, for example, one thing that I like to do, we've got this indicator called the MA ribbon, and I like this one. And again, lots of different ways you can use it. MA ribbon's going to have 5 moving averages, so 5 different lengths. In this case, 5, 10, 20, and it comes standard with 30, 50. I change it to 50, 200. We could throw that on there real quick, and we could just see, where is price in relation to those particular moving averages right now. I could see where the 5 moving averages are. That white one up here, this is the 200 on the 5. You've got the 50, you've got the 30, the 10, the 5. So currently, right now, all my moving averages are in reverse order, right? From top to bottom. The longest moving average is above all of the rest. The second longest is above, and so on. So what does that tell me? Basically, what that tells me is that we're in just a really strong downtrend, right? Price is below all of the major moving averages. It's starting to try and bounce here. But for the most part, price is below all the major moving averages, and all of the major moving averages are in order from longest to shortest. That is stereotypical of a downtrend, right? The reverse of that would be an uptrend. The reverse of that would be price above all the moving averages, and then from shortest to longest, shortest would be on top, longest would be underneath on the bottom. So if you're looking for changes of trend, you're looking for moving averages crossing. This is why people trade moving average crosses, because the moving averages are just giving us calculations of the relative trend. How is the very short-term trend, how's the very long-term trend, and so on. So you can look for, on the 5-minute, you could look for shorter time frame moving averages crossing up on longer time frame. You can look for price closing above, those sorts of things. There's all different ways, and there isn't a right or a wrong way. It's really about what makes sense for you, and then understanding, because different names respond to different moving averages in different ways. And that can only be learned through time. You got to spend time. Another thing that you could certainly do is you could strategy test. You could back test and see. For example, on Meta, let's see. Let's use Sonia's option here. It's the 9 cross of the 9 EMA crossing the 27 EMA on the 5-minute time frame. Let's use those. So I'm gonna say indicator. I'm gonna say EMA. Crossing up on indicator EMA. I'm gonna change this to 9. We'll change this to 27. And we could test and see, how does the stock perform when the cross up happens? How does the stock perform when the cross down happens, and so on? So we're going to get into the trade when on the cross up, and we're going to get out of the trade on the cross down. And just see how it works. Let me just type in this stuff here. 27, right? So here we're just testing this on meta. The 9 crossing up on the 27 on the 5 minute, that's going to get us in. The 9 crossing down on the 27 on the 5 minute, that's going to get us out. Oop, let me do this too. Let me look back, go back 7,000 candles. This thing's been in a gnarly downtrend, right? For the most part. So see how this strategy performs against the buy and hold. So we could see real quickly 128 positions over the past 4 months. If we had bought every single one of those cross ups, sold every single one of those cross downs, we would have taken 128 positions. Our performance on those 28 positions would be a negative 17.73% loss. Now, that's not very good, but it does beat the buy and hold. The buy and hold was a loss of about 25%. So you would have done better trading this than you would have just holding on to meta. That's not hard to believe. But that's an interesting reality, right? Over here on the right-hand side, 29% of the time this was a winning trade. 71% of the time it was a losing trade. Your average win was about 2%. Your average loss was about negative 1% for an average return of about negative 0.13. So this trade doesn't really work on all that great on meta. Now, if we were to go to something that's been bullish, let's look at Oxy and see how Oxy performs in this strategy. Will this strategy beat the buy and hold on Oxy, something that's been in a relative uptrend? Well, no. 133 positions across the past 4 months for a loss of negative 2.54% against a 15.48% gain. So that's kind of interesting too. And you can see up here on the chart, it's kind of hard to tell with the strategy tester there, but you can see where all those entries and exits are. So this is another thing that you could do, Vargod, is you could, you could just backtest and see if you want to trade the SPY and you want to trade particular moving average crosses, or maybe you want to trade MACD crosses, or maybe you want to trade divergences. I don't really know, but you can certainly test them all and see which one happens to do the best. You're likely going to find something that works better than other things. For example, let's try the 821. Instead of the 927, let's try the 821. We're not going to take the same amount of trades probably. They're going to be different sets of trades, but we're just using 2 different moving averages and testing and seeing. The 821 cross up versus the 927. How do we do? Well, now we've gained 1.04%. Is that very good in comparison to the buy and hold? No, but is that better than the 927? Yes. So we've done better when we buy that 821 cross than we do when we buy the 927. That's just on this particular name. So it's all about just trying things out, testing things out to see. I mean, that's why the strategy tester exists on the platform, so that you can play around and see. When we tested on SPY, same data set or same entry exit criteria for the trades. Looks like we do outperform the return of the buy and hold. Looks like over the past 4 months, you've got a buy and hold return of negative 6 3/4. And the performance of this particular cross, had we traded this, negative 6.08. So we did better buying these crosses, even though we were going long in this downtrend. We did better buying the crosses than if we had just bought and held. We could change it. We can go back to Sonia's idea here, the 927. And let's see if that works better. Oops. I mean, these are just really simple ideas, right? Like you could go get more extensive with this. So in this particular instance, Sonia's idea works better, right? Negative 3.83% loss when you buy that 927 cross versus 6.5%, and it was what, 6? I think it was like 6% on the 821. So for SPY, this 927 cross works better than it did for Oxy, and that's what you're going to find is when you back test, you're going to find that certain names perform better under the same criteria than other names. So then you just need to play around. Ultimately, you just got to play around. You got to look for names that you want to trade, and then you got to play around and see, well, all right, if I want to trade moving average crosses, let's try a bunch of them out. And you can add other criteria here. Like, for example, what if we said price closed greater than indicator exponential 9? So now we're not just defining that the 9 is crossing up, but we're also specifying that price has to be above the 9 when it crosses up, right? This is a little bit more bullish. Does it change anything? It didn't really change all that much. That's interesting. Negative 3.83% loss. So I know that was kind of like a long-winded answer to your question, Bargade, but the reality is that there isn't like a best indicator to use for 5-minute trading. It's really all about finding stuff that makes sense to you and just being consistent with that stuff, using it over and over and over again, taking particular setups and so on. At least that's kind of my process. That's what I would recommend to you. Money flow index and RSI divergence equal. Oscar, are you asking if money flow index divergence and RSI divergence is the same thing? Is that what you're asking? Can you check 927 on different time frame, like comparing? Sure, of course you could. Just switch the time frame right here. Check the 15. Now, of course, this is going to totally change results, right? We're testing back 7,000 candles, but now we're 15-minute time frame. So essentially 3x as long a period of time. So it's about a year worth of data instead of 4 months. So now we're including a lot of uptrend, right? Because markets have been selling off since, well, how long have markets been selling off? Let's go back to the daily. Market's been selling off since January. So I guess it's including like 3 months worth of uptrend. And then this one right here. Yeah, so on the 15-minute time frame, Sonia, performance is quite better. 16.56% gain versus a almost 6% loss over that same year of time. If you go to Oxy, let's see. Just since we're comparing, since we're using those two examples. So Oxy over that same period of time, buy and hold 163% versus 12.87%. So on SPY, this works a lot better on Oxy than Oxy, but Oxy's been in a nice uptrend for a year, which is kind of interesting. You know, you'd almost anticipate that this would work better on a stock that was uptrending than a stock that's been in a downtrend for the past 7 or 8 months. But that's actually not the case. Yeah, so Oscar, I'm not wildly familiar with money flow index. Let's pull it up and see. So I cannot speak to whether or not it would apply the same, or you would apply it the same way as you would RSI to look for divergences. Presumably you're looking for divergences in price, right? I'd have to look into exactly what money flow index is. Let me dig that real quick. Money flow index. Technical oscillator uses price and volume data for identifying overbought and oversold signals in an asset. Okie dokie. Flow of money into and out of a security over a specified period of time. But uses both price and volume to measure buying and selling pressure. Yeah, so it looks like you totally can. Yep. And I think with this, you would just, if money flow index is what you use, then that's what you use. I don't know that, and also I suppose we could test it. I don't know that one necessarily works better than the other. what I would kind of think is, if you want to use money flow index, by all means, use it and just use it, right? Like, get accustomed to using it and it'll work for you. I can see that it's not as, RSI kind of is a little bit more dramatic than money flow index, is what it kind of looks like to me. Let me do this real quick. Try and make them the same. Like RSI has these big drops, and money flow has them too, but RSI is taking out these lows, whereas money flow is really kind of holding them. Yeah, so I don't know which one would necessarily be better to use. I think it's just a matter of what you're comfortable with. Looks like SPY's trying to catch a little bit of a bid here. Trying. But it's definitely worth playing around on. So, like, one thing I see immediately, Oscar, you know, obviously you've got price making a lower low, right? And you've got RSI absolutely making a higher low over that same period, but money flow isn't really, right? Money flow is kind of like triple bottoming almost. So then that brings into question, like, are you going to get less signals with money flow? Maybe. It doesn't seem to move quite as drastically as RSI does. So that would make sense that you would get less signals. What you choose to do with that information is, you know, it's kind of up to you, right? Maybe you want to look for scenarios where you're getting divergent across both of them, both relative strength and money flow, where you're getting those higher lows or those lower highs on both. Like, it would be interesting. Let me go on Friday. I'm going to turn something off here real quick. Because we were looking at, we were actually live trading some very, very quick trades on Friday. We were looking at RSI divergence to determine, excuse me, to determine potential places to catch trades. So the first place that we had, what were we looking at? I can't quite recall. I think it was like in here. Excuse me. Maybe it wasn't there. Maybe it was here. Yeah, maybe it was like right here. And if anybody remembers exactly, let me know. I think it was like in here somewhere. We were looking at these falling wedges, and maybe it was like even this. We were making lower lows. We were making higher lows on RSI. And we were looking for the pullback to where we kind of broke out from, which is in here. So in that particular instance, you had higher lows on RSI. You have slightly higher lows, 13.3 here, 10.3. Yeah, so you had higher lows there too. It's not as easy to see. A little bit tighter. Yeah, I don't know. I think it all just boils down to like what makes sense for you. Ooh, SPY catching a bid now. Interesting. Where are we at on the day? Where did our day start? Okay. So do we have any divergence here? Because now we've just made a new high, which is interesting. We just took out this guy. Which is what you want to see. Let me go to 15-minute here. Do we have any divergence forming here? Well, yeah, very clear. Right? On the 5, we got very clear divergence here. Across all 3, in fact. Actually, no, I take that back. RSI didn't really give us a divergence, but money flow did. Very strong divergence, too. So that's kind of interesting. Another thing you could test and see is you could check and see, like, what happens when you get a divergent reading on money flow, but you don't get divergence on relative strength. So the way that you could do something like that is you would say, we'd say indicator money flow is greater than indicator money flow. And we would set this back maybe like, I don't know, 10 candles or something. So we're saying that the money flow index reading right now is greater than it was 10 candles ago. And then we'll do the opposite of that for RSI. So we'll say RSI is less than indicator RSI 10 candles ago. Well, let's also maybe we could also say that price made a higher low too. Price low, or rather a lower low. Price low is less than price low 10 candles ago. And let's just look like 20 candles later. See what happens. Interesting. Doesn't happen very often. 6 positions over the past 5 days. So we would have just taken an entry long. This is interesting. Some kind of decent results here. Let's go back farther and look. So Sonia, I have to say, anybody who tells me that their system works 100%, that is an immediate red flag for me. Because I don't believe it. So overall, I mean, the performance here is not wildly better than just buying and holding. That's not necessarily a bad thing. Performance is better than buy and holding as the farther you go back. We could try it on a different time frame. Let's go 15-minute and see. 15-minute starts getting nasty. So it's definitely interesting. I mean, it's just something to play around with. Oscar, hopefully this has kind of got your brain working a little bit, thinking about how you can play around with testing and seeing money flow versus RSI and vice versa. What's up, Universum 2? Thanks for being here. Peter, I saw your message about Tesla. I'm going to look into it right now. I'm going to turn off Strat Tester here. Let's take a look at Tesla and see how it's looking. So Tesla for now, holding a higher low. Pretty important. This low here at 838 is a big low to hold. Now you do have this level that we broke out from. I mean, you could argue that we tested it here. It's fine. We did sort of. And then we broke, and then we broke this high, right? And then we came back and we tested it. So, you know, for this thing to continue higher, I would be inclined to say it would be tough to take shorts on Tesla here or puts on Tesla here because you're coming into a previous low and it's holding for now. What I would be waiting for is I would be waiting for a better opportunity. So coming into a resistance level as opposed to a potential support level. There are certainly resistance levels higher. One thing I always like to do, anchored VWAP from all-time highs. So that's a spot, you know, it's come into play. It's interesting that the move into the anchored VWAP here is muted in comparison to the move here and the move here. I would kind of anticipate the importance of this anchored VWAP becoming less as time goes on. And that's what I would anticipate just going forward. I mean, I wouldn't be buying puts on this thing here. It doesn't mean it can't go lower. But I would wait for it to come into some bigger resistance levels. How do we determine where those resistance levels might be? There's lots of different ways that we can do it. Lots of different tools that you can use. One that comes to mind, we'll put on volume by price. We'll see if there's anything above that might be interesting to us. Let me move this. Ooh, where is this thing? It's so far back. Let me go to the weekly here. Okay, there it is. Interesting. I mean, it is a tricky spot for sure. Where it's at right now is going to be hard for it. But ultimately, we held. So for me, as a price action guy, like this area here, this low, is what I'm paying a lot of attention to on this pullback, because this low is really important. It's a low that got us all the way up to the highs, and we're holding it. Right, hold on. We're holding it. Now, if we were to fail this, if we were to break below it, which we could do, you know, we are coming into an area of resistance with that VWAP and the POC. Point of control is POC. That's where the most volume at price has occurred from a particular point in time. So from the highs, there's been more volume at the 882, 881 level than anywhere else between 1245 and 621. More volume has occurred at essentially where price is right now. So that's why price is having a little bit of trouble pushing through it, because there's lots of people that own it from that price. And you expect those people, if they're losing on the trade, you kind of expect them to sell when price comes back to their level. So they've kind of been losing on this trade for, you know, some months, for 2.5, 3 months. And now price has finally found its way back to their break even and they're selling. So one of two things is going to happen. Either sellers are going to overtake price and it's going to continue, make another leg lower, which it certainly could. Or sellers are going to dry up and price is going to push higher. So I really, you know, it really depends on, what, I guess, what your risk is, you know? Like, you could, in theory, if you're thinking Tesla's going to make another leg lower, then you could, in theory, this would be a logical place to buy puts because you've got a lot of overhead supply. It's clear price is trading below it. You would be setting yourself up for the leg lower, and you would be using the previous highs up here at like 940 as your stop. Price is able to get above this and make a new high relative to the ones that it made in the past couple of weeks, then you would know that the trade is kind of going against you. But that's $70 from here, you know, depending on how you decide to place that trade. If you're buying puts, a $70 move is going to eat away at your puts, right? If you're buying stock, common stock, $70 is what, 8% of a $900 stock? Or $870 stock? Maybe not even 8%, 7. I can't think of what it is off the top, but you would be using these highs as your stop, regardless, if you're going to be in puts, right? So then you just got to think about, well, what makes sense time-wise for that? If you're willing to let it go against you $80, what makes sense for you time-wise? You'd probably need to go out a ways for that to not totally crush you. If this thing goes $80 in the wrong direction and you have monthly expiry, like September monthlies or something, you're going to get crushed. It's not going to work. So you got to be thinking about that. But the fact that we've held this low here is important, in my opinion, to the overall trend. You're holding a really important low right now. So it's hard to, yes, you could short and then maybe it could come back into the 763 level. Like, that wouldn't be surprising. I could totally do that. And then still hold and go higher. So it's like all about your time. It's all about your risk, how much you want to risk. Now, if we had made a new low, I would think about this totally different. For example, if we had come down and we had taken out this low here and then bounced, then 100% I'd have been looking for a short right now. 100%. But since we held that low, it's hard for me to want to be short. Again, though, like I said, there's nothing stopping this thing from... This thing could totally go back to 763. So I can't give you a number because I don't know everything about your risk appetite. I don't know what you have in mind. And I'm sorry I can't be more specific with it, but there's just, there's a lot of factors to consider. But that's how I would be looking at it. So does that help you at all? I don't know, Peter. I don't know if that helps you at all, but hopefully it helped at least a little bit. Going back to the indices, see where we're at here. Qs. Not really doing a whole heck of a lot. Looks like SPY was... SPY really didn't do much either. So with these sorts of plays, what we look for... What we look for is not really what happened. It's sort of what happened. We would have really liked to have seen price get above this high, this previous high. And then, and they sort of did. I mean, it wicked through. So if you go down to a small enough time frame, you'll see price did make a new high right here. So now what we'll look for is price coming back into this little breakout area. And we'll see if it can hold, I'd say somewhere around in here. Huh, weird. I got a new mouse today and it is not liking me. It's not acting the way it's supposed to be acting. Yeah, so we'll see if it can do this. It's trying to hold this low here. Maybe they just hold this low. That would be interesting. The big question that, that's on my mind is how much lower do we have left to go? And I'm kind of feeling like we need to start gaining here quite soon. Otherwise, it's going to set in motion some things that we don't really want to see if we're more bullish. It's hard for me to believe that the 200-day SMA, I mean, perfect test. It's hard for me to believe that that's going to be it. But I don't know. Could be it. What do you guys think? Sonia says 407. 407 brings you back to this little pivot low here. Pretty much the level that we lost. Also brings you to the anchored VWAP from the higher low. What's up, Joseph? We could take a look at INTC for sure. Ooh. Yikes. Joseph, this looks terrible. What's up, David? Thanks for being here, bud. David says 412. 200-month moving average. Wow. $32. I mean, so you do have a very important low right here. 33.51. Pretty much there. The fact that they didn't hold this 39, even like 37, you know, really would have liked to have seen them hold this stuff in here, even down to here, and they haven't been able to hold any of it. That to me is pretty concerning. On the big time frame, you failed a new high. You really wanted to get above this 78 level. Because it's very simply, you know, new highs. Uptrends need new highs, higher highs. And we failed it. Not only have we failed it, you know, here's your old high at 75 or so. Here's you failed it. And then not only that, but you broke down, they gave it another run at it, and then they failed this high. It's not good. And so what they're doing now is they're going back to one of the, you know, the beginning of this entire move, which is essentially where they're at right now. I would have anticipated that they were going to hold this at 36 or, you know, somewhere between like 36 and 38. I would have anticipated them holding it there. And I mean, I assume that they tried. If we go and we look at it kind of in here. Yeah, I mean, to me, man, this is not in a great spot. Because they tried to hold and they bounced and then they lost it. So then that kind of sets up a bit of an expectation that whenever this bounces again, they're going to fail it here. Or maybe they'll fail it up here, 38. So I don't know, Joseph. I would say I would kind of wonder, like, why do you want to go long this if you could go long something else that looks quite stronger? Because this is looking awful weak. It's at a pretty, I mean, it's kind of broken through what I would consider the most important place. Can it hold here? Sure. I mean, it's reacted to this 200-month moving average before. Did it here? Did it here? All through here. There's resistance all through here. Support here. It could come back into it and hold. You have a level around 3161. This has kind of been tested. AMD has a similar setup lower on the weekly. You'll see it. This guy right here, kind of that same look as INTC, where they like really pushed through, never came back in. But when they come back in here on INTC, they failed it. I don't know. I don't love it. But that's just me. You might know something that I don't know. TTD? Huh. That is a crazy move over the past couple of weeks, huh? Did they have earnings? Had to have. Yeah. Huge gap up on earnings. So with these big pegs, these power earnings gaps, you really want to see those hold. Obviously, that's a huge move. Almost like, what, 50%? 40%? Something like that. $50 closed the day before at 54 and gained to 79. Maybe 35%. It's trying to catch on the anchored VWAP from the all-time high here. Looks like. Let's go to a monthly and see. This is interesting. So they've taken out two pretty important lows. What were you looking for? You were looking for back to 58. So essentially you were looking for that gap to fill. So the big important low that I'm looking at is this guy. Right in here. You could also argue that this is an important low. Right here. And so they lost. This is some trend, this is some price action trend stuff. But if you guys are interested in learning a little bit about it, I'll show you. You have your low here. From this low, we made a new high, an all-time high. And then, what did we do here? We lose that low, right? We traded below it. So then when we bounce, we come up in here. Why did we stop here? The reason why we stopped here, according to trend, is because of this, these highs over here that brought us down to this low over here that we lost. Head and shoulders. That's why head and shoulders are formed. So we take that idea a step farther. And again, I could be wrong about this, but we take that idea a step farther and we look at this low right here and we see that we have lost it. And then we look for the high that got us there up here. So I'm not saying it's going back to 97 soon, but I am saying that if it goes back to 97, it would probably be a good short opportunity. Maybe we get a slow pullback where it broke out. Could be kind of anywhere in here. Don't know exactly where they would stop it, but somewhere in here. Somewhere around in here, something like that. We go to a daily. Somewhere around in there. Somewhere between $55 and $51. Could be a opportunity maybe for a long. Looks like they're coming back to this. They're trying to hold here for now. Which again, anchored VWAP from the all-time high. Trying to hold that too. Yeah, I mean, it wouldn't shock me to see this thing back to 58. Vedant. Would not shock me. We'll have to see how the Qs end up doing. Thursday, you bought 22 August SPY 428 puts and closed on Friday for a nice gain. Wish I'd still held them. I wish you did too. That would have been a really nice trade. BKR for October 21 calls. Baker Hughes. I have to admit, this one doesn't look that great to me. October 21 calls. October $21 calls or October 21st? I think I'd be looking for this back to 17. October 21st. Let me look at a couple other time frames here. So it failed new high on the weekly. To me, this is a warning shot. Whenever I see stuff like this, this is always a bad sign. You needed a new high. Especially after you got this nice little, you got this retest of the breakout and they held it and then they came back and they failed. They did not make a new high. That is concerning. Even if they had just barely gotten up over it, that would look better than this. So I consider this bad news. Let me go back to the monthly. See, this is a big low right here. You made a lower low. Right, here's your relative low, and then we took out that low during COVID. We still have not come back to test it. Wouldn't surprise me if we did. So that's where I'd be looking. This kind of seems like maybe it's a longer term type of, like a swing type of stock. I could be wrong about that. I don't know anything about Baker Hughes. That weekly, I mean, this price action is awful for calls. I mean, we're looking at a daily here. This is like 3 weeks of price action, maybe more, maybe a month. This thing hasn't done anything in a month. Yeah, I don't know. That's my thoughts, man. CNC, Joe Nobody. My man, Joe. Hope you're well, buddy. You're not nobody. You're somebody. CNC. What are we asking here? Curious to see if it will break 105 by year end. I mean, I'm not wild about making predictions like that. I have a friend, though, that likes to use diagonal. He never uses diagonal lines, but he likes to use them to make assumptions about, or to make determinations about what. Actually, I probably could have just thrown the auto trends on for this, couldn't I? Yeah, I could have. Oh, interesting. So they're drawing slightly differently than I do. Interesting. Anyway, he likes to use diagonals to get an idea of time. Like if he's ever trading options, he will use diagonals to kind of surmise when price might get to a certain level. So with that kind of perspective in mind, you're asking about the end of this year. I mean, I don't know, man. It's certainly possible. Like it could. I'm not gonna say it won't, but I don't know. Like there's room. Let me see something real quick. See where the autofib's drawn from. Try the weekly here. Coming up into that 1.618. So that is something to keep in mind. That $100 level is going to be important, right? $100 psychological level is important always. It doesn't really matter what stock. I'm going to go back to the monthly here and just draw my own real quick. Go here to here. So the next level above is the 2. Which is at 105. I guess that's what you're seeing. Is that 104.77? I mean, sure, it's certainly possible. This thing is wildly strong. I'm just not going to speculate on where it's going to be at what time. Currently putting in a lower high, though. So, you know, that's something to keep in mind. You want to gain this 98.5. And then you could argue it is extended off of these June lows. Quite extended off of the VWAP from them. VWAP's at 87.77. You could argue it could cool off, but I don't know what they do. I don't know why they would cool off. Earnings, let's see what the deal is with earnings here. Earnings are in October, end of October. Plenty of time there. Yeah, I don't know. I mean, it's obviously it looks great, right? It looks great, making tons of highs, tons of new highs all the time. Held this really important low right here. So yeah, healthcare, gotcha. Healthcare ain't getting any cheaper. I know that. Mac. Oh no, sorry, Francisco. Their trend line, you can draw an INTC from November 1991 and March 29. November 1991. And what? In March 2009. What does Auto Trends say? Let me update this. Yeah, it's just that those lower highs freak me out, man. Anyway, enough of INTC. Mac, what is my general take on UNH and healthcare sector in general? UNH. Well, if it's anything like CNC, it's strong as can be. Yeah. Jesus, look at this thing. Needs a new high, though. It's not really what you want to see. This is concerning, at least a little bit. And something that definitely needs, you definitely need to keep your eye on it. Other instances where this has occurred, right here. Gosh, this new mouse, I'm gonna return it. It's terrible. Right here, you made a high. You tried to make a new high, and you did not. And so you failed essentially the entire move in between, right? You made a new low. This kind of set up an expectation that it did not end up meeting. It ended up actually gaining. Trying to look for other instances where a new high was not made. We're just looking from COVID lows, essentially. Every time we went into new highs, we gained. We actually got a new high. Here, we got a new high here. This is the only place, it looks like. I guess right here. Nope. I mean, they gained it. They went for it here, but they never really got up to it, so they didn't like proper test it. But then when they finally tested, they did actually make a new one. Make a new one, make a new one. Make a new one. And here, this, I mean, it's something to keep in mind. It's something to keep in mind. I'm not saying that it's not going to make another new high, but this thing has moved. It could be due for a little bit of pullback. So we'll just watch and see. See what it wants to do. What is health? What's the healthcare? Somebody jog my memory. What is the healthcare ETF? CHPT in the interim. Charge point. Ooh. Filled this gap. Failed a new high. XLV. Thank you, Francisco. Appreciate you guys. We'll go back to it here. Francisco's the winner. Let me go to the weekly here. Yeah, I don't know, man. I don't know. This thing, to me, this doesn't look good. Kind of looks like what it did previously. You make this low right here, right? And then you make a new high relative to the previous high that took you down to the low. All right, so let's compare that. Here's your low. You make a new high relative to the high that took you down to the low. And then they come in and they make a new low. And then what did they do here? They came in and they made a new low relative to this. And so when they bounce it, they fail and they go lower. They did not make a new high. So here, a little bit better relative bounce, but still failed. I don't know, man. I don't love it. I don't love it. I'd really like to see them make a new high against this. $20. That's on the bigger time frames. On the daily, I mean, they could bring this all the way back into like $12. That's kind of where I would be looking for a long, isn't here. If we do anchored VWAP off of these lows, where's that at? Oh, That's something. And it doesn't really seem to always respect it nicely. So it may not play. But it's something to know where it is. You have to be careful with anchored VWAPs. I don't know if you guys were here on, what was it, Friday? Did we have Friday that we had Andrew on? We had my buddy Andrew on. And he talks about anchored VWAPs, how you can kind of form fit them to make them fit your thesis. So you got to be careful with that. I try and always just anchor from like really pivotal levels. Big highs, major lows. So from this high here, this all-time high looks like, yep, damn near the all-time high. What do we see? What do we see? First time, it gains it and ultimately fails. Second time, it gains it, not as strong, fails. Third time, doesn't even get to it and fails. Fourth time, doesn't even get to it. I mean, this thing could be setting up for a whole nother leg lower. $4. They already lost the whatever this is, like SPAC or pre-IPO or whatever this is. They already lost those lows. I don't know. I don't like it. So that's where my head would be at, Joe. Treat. I would not be wanting to buy calls on this thing. Could be wrong though, of course. SQM. Failed new high, didn't it? So holding higher lows, but also making lower highs. I would think, and I mean, I don't know for sure. This thing could just do this for a while. And then wait and see. I mean, until you make a new high, you really need to gain this 114. And they failed it. Just barely, but they failed it. But they're holding a higher low here. So we're just tightening. I would say best to wait for a break. Me personally, the way that I would do it is I would wait for a break and see what it does. You know, maybe it does something like this, or it comes back. That's really kind of where my head would be at. Or it does the opposite, right? It breaks down. And then we look for a test back in to short. Unless you're playing both sides, I would be not inclined to do anything, really, because I think this thing could probably go sideways. At least that's what it's doing right now. I would let one of these pivots break one direction or another. All right, so getting back into our conversation about healthcare. XLV. Huh, interesting. Interesting that some of these individual names look so much better. Like this looks not good in comparison to those individual names we were just looking at. Interesting. There's another example of that same idea I was talking about earlier. To almost the penny, the rejection there. Low to high, take out the low, come back to the high that brought you to it, the one that you took out. This doesn't look very good to me. I say make a new high. Make a new relative high. I guess they sort of did. They did a little. They were able to gain this. So let's see, levels lower. This has been done. Just want to look at this real quick, because this is kind of what this reminds me of. Yeah, Robert, no problem, man. I mean, it doesn't look terrible. It's just kind of hard to read. You know, you made new relative lows against a level that you would have thought would have held. They did not hold it back in June. But they managed to gain, and then they held where it broke down from, right here. And now they've continued to make new highs. So there just may be something in here that's a little bit lower that they come back into. The healthcare space is not one that I pay really any attention to. So I want to preface this with that understanding. This is kind of interesting. They're holding the anchored VWAP from the near-term highs. Or are those the all-time highs? Those are the all-time. No, they're not. This is the all-time. Yeah, it is the all-time high. And we do see this a lot. When you're breaking above an anchored VWAP from a relative high, oftentimes price wants to come back in and test it more than once before it can really start moving. What are the MAs doing? I mean, it's got the 200-day just below, acting as support right now. Yeah, I guess we just kind of have to watch it. Above 134 and things get interesting. 124 and things get interesting. Hard to know exactly what direction they're going to take it. How are the... Let's do this real quick. Oops, that's not what I want to do. I'm just going to add SPY to my chart real quick here. It could bounce here. If it doesn't and continues lower, you know, you're going to be looking in here because that's a big low that you're going to want to see hold, 127 or something. If they can't hold that, then you're going to be looking in here, 123. Since I don't know much about the sector, I would be inclined to either let it come way down to my lowest target, even though that seems like really far away and scary right now, or I would let it make a new high before taking the trade on it. Walmart. Yeah, what is Walmart doing? Haven't looked at this in a few days. Ah, totally has filled the gap. Pretty much, at least. Let's go to a smaller time frame. Interesting. Got a bunch of trapped people from the gap up. Average buyer from the gap up owns this thing 139, trading 134.6. Looks like I had some lines drawn. Yeah, I mean, the gap fill seems likely. I mean, pretty much have done it already. They can be tricky sometimes with these gap fills. Sometimes they don't actually fill it at the candle that made the gap. Sometimes they'll just fill it up to like the previous high, like that. Let's do this. Whenever there's a pivotal low or pivotal, just anything pivotal in the chart, I'm going to anchor a VWAP. So that big gap down seems like an important spot. And this really wouldn't surprise me if they're not able to hold this. You know, you really kind of want to see them hold somewhere in the 133 to 134 range in here. If they can't hold this, I would guess they'd probably take it all the way back to this pivot low right in here and test, which would jive with my anchored VWAP from the gap down, 127. Yeah, so maybe I should put XLV on my watch list. I'll do it right now. I got no problem keeping my eye on things. Looks like it is in my sectors lists. I've actually forgotten that I had a sectors list. How did we close today? I just realized that it's after hours. Not great on the Qs. Close below this nice little pivot low that we had. That's not nice. How do we do on SPY? SPY held it so far. Okay. How do we do on IWM? IWM also held it. Just looking at those same relative pivots. Let me lose all this. Yeah, so IWM right back into the high that we gained. This guy. And trying to fail below it. Oh, I didn't even look at that on SPY. Let me go back real quick. Yeah, so we lost that on SPY. It's right here. Looks like we might have a little bit more selling to go. Oh, didn't something happen with Ford? Oh, yeah. Big gap down. Nasty. What else, y'all? We got 20 minutes left. Do we have any questions about anything? While I'm kind of stepping away from charts for a split second, we've got a couple events this weekend to talk about. Or rather this week. I'm sorry, not this weekend. This week. Tomorrow night, we're going to be on Twitter Spaces at 8 p.m. Eastern Time. We're going to be talking with Greg Krupinski. We're going to be talking with A Stocks, Bones Trades, and Brand Keo. They're going to be giving us their favorite trade ideas for the week. So that will be awesome. This Thursday night, the live charting show is back. We took a week off and we are back this week for another episode of live charting. This week, we're going to be hanging out with Jermaine, our good buddy Jermaine. He is at Cyberdog2. He's the strat soldier. This guy is a strat trader. So if you are interested in the strat, maybe you trade it yourself, or maybe you're just interested in learning how to, Jermaine's going to talk us through that stuff. He's going to be taking your chart requests. So bring your chart requests for Jermaine. He's a great guy, great energy. Love hanging out with Jermaine. Yeah, that is what we've got going on this week. Let me also, if you're curious, let me give you this. Did you know that TrendSpider has a Discord? TrendSpider does. I haven't used my screen effects, so there you go. There's you, nice on target with the Discord links. Get up in our Discord. Parker, I'm sorry. I totally forgot about these things. Get up in the Discord. It'll blow your mind. No, come hang out with other traders. Come hang out with TrendSpider community members. I'm in there from time to time. All the guys that work here are in there from time to time. Options flows, Vedant. So we don't have options flows. We just have unusual options. Unusual options just give us an idea of where the big money players are. Unusual options can be added via your sidebar. Click on Add or Remove Widgets. Add New Widget. Choose the Unusual Options tab. It's going to appear like this. So at the bottom is a list of the options order flow, the unusual options order flow in order. So the newest, of course, at the top. At the top here, we've got a couple of slider bars. These slider bars correlate with the dot plot graph. If we click this crosshairs, it opens up to full screen, and then we can adjust the options order flow that we want to see. So we can adjust by expiration date, we can adjust by premium size, and strike price. So if you're looking for just particularly, large premiums, you can slide this bar over to the right here, and it's going to just weed out the largest premium orders. This one looks like $774,000 in premium. This one, $803,000 in premium. So at the minimum, these things have to be at least, I believe, $20,000. Unusual options are orders that are $20,000 or more. It can be either sweeps or it can be block trades. So it is not 100% of all of the options order flow. It's just the bigger orders. But the bigger orders give us an idea of where big money is positioned. So I think a very powerful little tool here that you can use. And this is available on all TrendSpider accounts for free. Doesn't matter which TrendSpider account you have. So the fact that you ask that makes me theorize that maybe you don't currently have a TrendSpider account. And if you don't currently have a TrendSpider account, I would like to offer you a 25% discount on one. It's right here. I'll hook you up. If you're interested in a discount, you're interested in trying out the platform, give that a go. Free 7-day trials. And this is going to be good. 25% off on any of the plans that we offer. So give it a shot. You got nothing to lose. GS. We'll take a look at GS for you real quick. Yeah, so I've been watching banks today. GS definitely the strongest of the bunch. Most extended. I was watching JPM personally. What do we have here? We have an earnings date. Yeah. So we got this gap and go on the earnings. I mean, a move back, if on continued weakness on the SPY, a move back into this 330 would not be all that surprising. What does XLF look like? Yeah, I had a target somewhere around in here on XLF. I don't even know if that's going to hit, though. XLF could definitely take another short leg down. I mean, I don't know if I think that the selling is quite done on Goldman. Another thing that I'm not sure about is how the banks correlate with the dollar. do banks tend to do well when the dollar is doing well, and vice versa. We could take a look over here. Interesting that when the dollar was kind of just starting to maybe hit its stride, right around in here, that's when the bank started to cool in November last year. So maybe the thing to do in this scenario is watch the dollar. Dollar coming into new highs. Something to think about. JPM seemed a little bit cleaner to me, but I was definitely watching these two. I mean, JPM technically does have room to like 109. So if JPM has room to 109, in theory, GS has room to 293.6. Could happen. Whether or not it will, I don't know, but it could. Let's see, what do we see here? Yeah, so this is kind of like on a small little daily time frame. Well, this is a daily time frame. This is kind of one of the setups that I like to day trade. It's not like super clean divergence. It's almost there though. You have almost a fresh low here. They held, but you have a divergence on RSI. And usually with these things, we get some sort of pullback into that breakout area. So it is possible. This thing could come back quite a bit. Doesn't mean it will, just it could. Actually, let's look higher, because this is probably more realistic, because this is just all untested stuff. 310, but 310 from here, that's what? That's 10%, $30. Yeah, it might be best to sit on your hands and let this kind of play out a little bit. If you're thinking about, I don't know what you're thinking about here, but this is the high that we gained. This is the low that got us there. So that would make some sense. 308. We also technically gained this. 330 might be a spot too. We'll just have to see. I don't know. It's kind of why I like JPM, because it's a little bit tighter. And just kind of cleaner divergence too. Well, I think that's divergence. It might not be. Oh, excuse me. It's kind of like longer term, weekly. Yeah, it's definitely there on the weekly. What are the other banks? Let's see, BAC at a spot. WFC. Yeah, banks are all in kind of an interesting spot. GS is just so far progressed in comparison to the bunch. It's strong though. Just relatively speaking, is strong. Hasn't had a good past couple of days, but So guys, any other questions about anything TrendSpider related? Are you curious about anything? Can I answer any questions before I go? Because I'm about to get up out of here. And I want to make sure that I've answered all the things for everybody, if there are things that people would like answered. Nothing else? You guys are good? Well, if y'all are all good, then I'm going to jump up out of here. Oh, how does TrendSpider differ from Thinkorswim? I don't see anchored VWAP and other tools you use. You don't see anchored VWAP where? On Thinkorswim or on TrendSpider? Robert Brush's brain is full. So I use Thinkorswim to execute my trades. So I'm not using it for really like technical analysis of any kind. What I'm using TrendSpider for is all things technical analysis. There's a ton here. Very, very briefly, and it's going to be a lot, right? Okay, so you don't see anchored VWAP on Thinkorswim. I think they have it, but I think you have to code it in. So it's a little bit of a pain. The coding's not hard. Like, you can Google it and find a YouTube video on how to do it. It's there, but it's not like on TrendSpider where I right click on a candle and say create alpha trends anchored VWAP and it does it. So auto analysis tools. TrendSpider automatically draws fib levels, automatically draws trend lines, automatically draws these heat map areas, gives us an idea of where support resistance might be based off of previous consolidation in price. Alerts, a couple different types of alerts that TrendSpider can do. Dynamic and multi-factor. Dynamic being, you know, if I want to be alerted when price touches this anchored VWAP, I right click on it, say create alert at line, choose the trigger, choose the sensitivity, choose the time frame, choose the expiration, choose the triggers. Very simple. Create an alert. And now I'll get an alert to let me know that price has touched or bounced or broken through that anchored VWAP. I can also create alerts called multi-factor alerts, which are exactly what they sound like, alerts that contain multiple factors. If you want to be alerted when the 50 MA crosses up on the 200 MA, on the daily time frame, on volume, and, you know, whatever, 10 other requirements, you can write all of that stuff out and get an alert on it and in one fell swoop using the multi-factor alert scripter in here. You can scan 4 different time frames at a time, up to 4 different time frames. You can look for price conditions, indicator conditions, candlestick pattern conditions, earnings dates, values, news. Lots of things you can scan for. You can back test like we were doing earlier. You want to know how a particular name performs when XYZ moving average crosses up on XYZ moving average on volume, and, you know, price is making new highs relative to its 20-day high, and RSI is above 50. We can backtest it and see. Can't do any of that stuff on Thinkorswim. On the right-hand side here on the sidebar, a bunch of tools available for you. Again, we went over unusual options, the news tool, insider trading. This is just tracking insiders buying and selling stocks. Smart checklist. Love the smart checklist. Smart checklist allows us to load up sets of criteria and check and see if that criteria is being met on a stock at any given time. So, for example, this full time frame continuity is looking for green candles on the 60-minute, the daily, the weekly, the monthly. Previously, you would either had to have 4 time frame charts up, or you'd have to switch to each 4 time frame to know what candle was being formed. Well, here I can see it very clearly. We're green on the 60, we're green on the monthly, we're red on the daily and the weekly. Now take that, extrapolate it out, and add other criteria here. Add above the 200-day moving average, above the 50-day moving average, below the 80 MA, RSI greater than 30. Add 10 criteria, and then think about if you have 10 criteria that you need met to want to trade something, you got to go and look for all that stuff occurring on the chart. You could write that all in here and then see just instantly if any of it's true and of what of it is true. Hugely time-saving tool, that smart checklist, which is why I like it so much. Trading bots. You can now send your scripts. So let's say you scan for something. You could take the conditions that you scan for and turn them into conditions to get into a trade, utilizing a order execution platform. We're about to launch our own order execution platform. But you can send signals from TrendSpider using the same scripting that you use for your alerts, is the same scripting that you use for your scanner, is the same scripting that you use for your backtester. Send that stuff to your order execution engine and take a trade based off of it. Based off of essentially a TrendSpider alert. Seasonality lets us know how a stock performs during any particular month of the year, any particular hour of the day, day of the week of the year, over its history. So, you know, that's kind of a loose explanation of what TrendSpider does. TrendSpider is an all-in-one technical analysis platform. You know, our goal is to create a tool that a trader can use to do all their technical analysis. They don't have to go and use 3 tools. They can just do it all in TrendSpider. Whereas TradingView, yes, they do have, or I'm sorry, not TradingView. We're talking about Thinkorswim. Thinkorswim does have charts and you can draw lines and put indicators on them. But all of that other functionality is not quite there. So that's kind of the big thing. And then, you know, like I've talked about during this stream, live support. You can contact us anytime pretty much and get answers to your questions. We offer free training. I'm here 3 days a week answering questions. We offer tons of live content, give you guys trading ideas, get some expert analysis on your charts with the live trading show or the live charting show. So that's kind of the gist of it. Dory, how long can SPY gap down stay open from this morning? It can stay open for a long time. Doesn't mean it will, but it can stay open a long time. Let's go back. Just looking at COVID. The move off the COVID lows. What you see there? I see a big old gap that has not been filled yet at $290. Will it fill? I don't know. It could one day. But it's still there. There's some small gaps in here. Here's one. 339. We can turn on our gap detector. It'll point them out for us. Yeah, so that's the big gap that we have still to fill below 290. How scary would that be? The world would be ending. Yeah, so gap detector, the thing to keep in mind with gap detector, if you ever are curious why it's not spotting a particular gap that you see, has to do with the gap factor. This is an ATR value. ATR is average trading range. So let's say, for example, your average trading range of a stock is $1. If your gap factor is 0.5, that's half of $1. That means it's only going to show gaps that are 50 cents. Or more. It will not show a gap that's 25 cents, even if it's there. So the smaller the gap factor, change it to 0.25, the more gaps it's going to find. See how it just added one down here. It added one right here too. So keep that in mind if you're using the gap discovery tool or gap detector tool. So yeah, that's it for me, guys. That's it. My time is up. So I'm going to jump out of here. I'm going to throw some targets at you just because I didn't use them enough today, and I think they're so much fun. Parker worked so hard on them. So don't get blown up. If you're going to be trading in this, make sure that you're trading in the right direction. Make sure you've got your stops set properly. And, you know, keep your targets in mind. These are like really bad dad jokes, aren't they? Koobsy, what's up, man? Thanks for being here. Anyway, yeah, I hope you guys all have a great rest of your day. Thank you so much for joining me today. I do very much appreciate it. Robert, Koobsy, Dory, Gary the Roach, Vedant. Who else? Let's see. Joe, Francisco, Lori. Lots of familiar faces here. Chewy, Mac, David, Universum, Sonia, Oscar, Peter, Farkad, Ben, Chitty. I appreciate all of you. Alex, I appreciate all of you guys for being here. It means a lot to me. And again, I'll be back on Wednesday hanging out with y'all. But if you guys are looking for some trade ideas, join the show tomorrow night on Twitter, 8 p.m. Eastern time. And yeah, we'll talk to you then. So have a great rest of your day. Trade them well. Be safe out there. Holler at me if you need anything, or use that contact us button if you have any TrendSpider related questions that you need answered. Those guys are happy to assist you. So until next time. Happy trading. See you guys.